Hey, Boris Musheyev here, and welcome to this video, 2023 inflation tax brackets explained. In this video, we're going to talk strategy. We're going to talk about how inflation has got nothing on us. If you're a business owner, this is for you. Inflation of the tax brackets has got nothing on us. Today, we're going to talk tax strategy, but really, most importantly, what I want to cover today is that you are not in a tax bracket that you think you are. So keep pumping money into your business. Now, a lot of business owners, and you'll be surprised, a lot of business owners, they come to me and say, hey, Boris, I specifically and intentionally do not make more than certain amount. Like, why is that? And like, oh, I don't want to be in the next tax bracket. And you don't want to be in the next tax bracket. This is a mistake a lot of business owners make. And today we're going to talk strategy, and we're going to talk about how whatever bracket you think you are, you're not in it. You're actually in a lower tax bracket. The second thing we're going to talk about is the increase of the standard deduction that the IRS gives you and what opportunity it creates for you as a business owner, especially when it comes to hiring family members. And we're going to talk about that. Now, before we continue, my name is Boris Musheyev. I'm a CPA and a tax strategist. Every Tuesday, I release a tax strategy video on YouTube. We get over 20,000 views on our channel, but unfortunately, not a lot of people subscribe. So please, if you like the content and you enjoy it and you want to pay as little as possible on your taxes, I ask of you to please go ahead and subscribe, hit the like button, hit the notification so you get notified every time I release it. And of course, like it and leave comments below. Without further ado, let's get going here. Now, this is directly from the IRS website, and these are the tax brackets that they released for 2023. We are in 2023. What does that mean for you? How can we really utilize this to our advantage as a business owners to save money on taxes and the strategy and continue pumping money into our business? Okay, now let's kind of start with from the bottom up. If you didn't notice, like IRS starts with the highest tax bracket, 37% on top, and then works its way down, right? So we're going to start from the bottom. Now, here's the thing. The lowest tax rate that somebody can pay is 10%. And that is if you are single and your income is less than 11,000, or married, your income is less than 22,000. One thing to understand about our tax code is that our tax code is a gradual tax code. That means you first pay a certain amount of percentage on a certain amount of money, then it goes up instead of a flat rate. So in this case, right, you pay 10%. We're going to use married individuals in our examples going forward in this video. But if you pay, 10% on the first $22,000, okay, of your income. And let's say on the next bracket, in the next bracket, right, now that you hit the next bracket over here, you pay 12% of any income over $22,000 between $22,000 and $89,000, which is the next bracket. Over $89,000, you go into 22% bracket. This is an important factor for you to understand. It is a gradual tax rate. It is a gradual tax bracket. So just because you're going to make $80,000 as a married individual doesn't mean you're going to pay 22%. That's why a lot of people be like, oh, I don't want to make more than a certain amount because I don't want to be in the next tax bracket. You are wrong. This is called, what I'm showing you right now, it's called marginal tax rate. Marginal. Then there is something that is called effective tax rate. What is the effective tax rate? What that means, if you take the first 10%, then the next 12%, then the next 22%, and you add it up and you divide it by the income that you earned, you will see that your effective tax bracket is actually less. I'm going to show you an example in just a second. The next one right here, the next bracket is 24% bracket. And then we got 35%, and the highest one is 37% if you're a married individual and you're making $693,000 or more, right? 693, 751, all that numbers. But here's the thing. I have a quiz for you. Put the answer in the comments below. If you make 700, actually, I take it back. If you make $1 million, the answer is in front of you. If you make $1 million, what is your tax bracket? Go ahead. I'm going to give it 5 seconds for everybody who's watching on YouTube to put it in the comments. 5, 4, 3, 2, 1. Wrong. Wrong. I know for a fact right now you are wrong because your marginal tax bracket is 37%. But your effective tax bracket, if your taxable income is $1 million or more, your effective tax bracket is about 30 to 31%. Effective. That means you're not going to pay $370,000 on taxes. You're going to pay around $306,000 on taxes. That is effective tax bracket. Big difference. You're like, well, Boris, how is that possible? That is because when you make $1 million, you don't pay 37% tax on $1 million. You pay 10% tax right here, right? 10% tax on the first 11,000. Then you pay the next tier of 12%. Then the next tier, oh, excuse me, we're talking about married individuals. So I take it back. 10% on the first 22,000. Then 12% tier, 22% tier, 24% tier, bam, up, until you get to 37. So 37%, you pay 37% only on a difference. You follow that? So if you make $1 million, ladies and gentlemen, if you make $1 million, the 37% kicks in on any income after $693,750 if you're married filing jointly. So you don't pay 37% on anything that you earned before that. It's after. Now, eventually, when you make $3, $4, $5, or $6 million, then yes, the total marginal and effective bracket will be 37%. Now, why am I telling you this to you as a business owner? Because some business owners are like, oh, no. I ain't going over my 35% bracket. Oh, I want to stay in my favorite one is 24%. Yeah, I don't want to do that more than that. Okay. I don't want to do more than 24%. Yeah, I'm not going into 32% bracket. I'm not making 364,000 because I don't want to pay 32% tax. Well, you're not paying 32% tax. This is huge for a lot of business owners that think, and I always explain, look, and I take out my whiteboard and I'm like, hey, there's a marginal, then there's effective tax rate. So you've got to keep pumping money into your business. Don't worry about the tax rates because you always make more than what you pay in taxes. And second thing is that you've got to be able to strategize. You've got to be able to use tax planning strategies. Look, if you have a tax preparer, you do not have a tax advisor. As a matter of fact, when you're doing tax planning for yourself, your first stage of tax planning, your tax advisor should easily be able to identify for you anywhere between $20,000 to $100,000 in tax deductions and write-offs through tax planning. So make sure that is really important as part of your strategy, not only tax bracket strategy, but also your deduction strategy. And always remember, marginal tax rate is very different from the effective tax rate. Now, let's talk about what do we got here? Standard deductions, right? Let me just make this. Yep, perfect. Standard deductions. Now, what is a standard deduction and why is this important to you as a business owner? Here's the thing. IRS says, look, if you're married filing joint, the first $27,700 of your income is not taxable to you. Think about that. That means, whoa, if I go out, if a married couple goes out and works and they only make $20,000 for the year, well, guess what? They're not going to pay any income taxes. You might say, well, Boris, but they pay taxes on their paycheck. That is true. Any federal taxes they paid on their paycheck, they will get back the refund. That's the idea of income tax refund. Why in America we have so many people getting refunds, or especially if they're in a lower income level? That's because they're getting back the money that they paid in taxes because of the standard deduction. Anybody in America is entitled to this deduction when they're filing taxes. Now, there's a second type of a deduction that is called itemized deduction. That means you get to choose. You get to itemize, right? Not to choose, right? Itemize certain deductions that the IRS allows you. And if those deductions add up more than the standard, IRS says take those deductions. Now, should have made another slide for this, but stick with me for a second. Married joint individuals get to deduct $27,700 from the top of their income. So if they made $100,000, minus 27,700 on a difference that will pay tax. But if that married couple also has a house and they pay mortgage interest and they pay property taxes and they give charity, if you combine those three deductions, right, those three deductions, and these three deductions equal more than 27,700, IRS says, oh, you can take that deduction instead because it benefits you more. Usually, individuals and couples that don't own a home do not take itemized deductions because the biggest part of the itemized deduction is interest, mortgage interest, excuse me. And then you're like, oh, I'm at 27,700. Let me tackle in my charitable contributions. Most individuals do not give more than 27,700. For example, if they're not itemizing, so they can't even take their charitable contribution. So that all comes into a strategy planning. So when people buying a house, like, hey, will I get a deduction for my home? Yes, you will. And if you donate 10,000 instead of 27,000 every year, you can put that into your strategy planning and calculating. Okay, now, why is this also important when it's time for us to hire our family members? Well, think about it this way. You can actually hire children in your business to help you in your business. Any salary that you pay to your children is a direct write-off for your business. Now, here's the thing. The standard deduction that you see on my screen right now for single individuals is $13,850. That means if your children earn up to $13,850 in income from your business, they will not pay any income tax. Just about 2 years ago, the standard deduction was $12,000. Now it's $13,850, adjusted for the inflation. But inflation got nothing on us because we're doing strategy, right? Think about that. 2 children, that's about $28,000 in tax deductions. That's because they don't have to pay any income tax on it on the first $13,850 that a child earns, whether it's working for the parent or whether it's working for another job or they have a summer job or whatever that may be. So really, really important for you to understand this because this creates a tremendous opportunity. Inflation tax brackets, bring it on. Now, I do want to quickly summarize before I end this video. Number one, do not think that you are in the bracket that you think you are because of our marginal, our gradual tax rate and margin. This is called marginal tax rate. Then there's marginal, then there is effective, okay? Two different things because not all income gets taxed. I should say not all income gets taxed equally. Not all income is equal, right? Not all income gets taxed at that bracket that you fall into. So super, super, super important for you to understand that. And second thing is that take advantage of the standard deduction. Number one, strategize with your tax advisor. If you're buying a home, doing a donation, or anything of that sort, do you get standard or do you get itemized? Actually, I just thought of something, is that we're probably going to see a lot more and more individuals take a standard deduction compared to a itemized. The reason is because the standard is getting so high, and with itemized, you're only limited to deduct $10,000 in state income taxes. So the only thing that's left to help you out is a mortgage interest. But if you got a $400,000 home, you probably don't have such a large mortgage interest deduction. That's why you should be deducting your home as a home office for your business, so you can at least funnel some of the expenses for the home through your business. Like, there's so much opportunity to plan over here. Like, inflation rates got nothing on us, ladies and gentlemen. If you have a tax preparer, you do not have a tax advisor, please get yourself a tax advisor. We got some more free stuff for you to explore in the description below of this video. But other than that, thank you so much. Until the next time.